Boom! What's going on, guys? 360 Digital Closing Bell here. Daily Energy Market Summary. Episode number 135 here on this gorgeous Monday, October 12th, 2020. As always, I'm your humble correspondent, Michael Tanner, joined on the line by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley, coming to us from the Oklahoma City airport. We get to see him in person this week. Lucky us. How's the airport, Stu?
It's a beautiful day in the neighborhood, and I get to go through security in a minute.
We also have a special guest, which we will bring in here in a little bit. But first, guys, we need to hustle through what happened in the markets today. We'll do a quick Hurricane Delta update. Ring Energy gets a little extension on some of their Delaware Basin asset sales. We have a nice little minerals exchange out there in Oklahoma. Stu's got some stuff in the international index that is absolutely moving both oil and natural gas markets. We'll cover, obviously, some of the splits or the 12-month strip curve for natural gas because it's looking crazy right now. There's some weather and obviously some feed gas stuff going on because of Hurricane Delta. We'll cover on the U.S. equity side. Everything's just up. Amazon's having Prime Day tomorrow. Of course, everything's up. But first, guys, just subscribe. 360 Digital Closing Bell, iTunes, Spotify, YouTube, the best way to stay updated on all of your energy markets. Speaking of stock markets going up and Amazon Prime Day, you look at the headlines today. Stock markets up off Amazon Prime Day, October 13 to 14. To give you guys an idea, FedEx, 53% of their revenue comes from Amazon. USPS came out the other day and say 12% of their revenues come specifically from Amazon. So when those guys sell a lot, guess what? The entire economy does well. There was also some stimulus talks that happened today that really boost markets. Nancy Pelosi and Treasury Secretary Mnuchin came out and both said they're looking forward to hopefully getting a deal done. Looks like it's going to be between 1.8 and 2 billion or $2 trillion. I wish it was only that low. No, we're talking in the trillions, people. And we look at those overall indices just as a whole. SPY was up about 1.6 percentage points. NASDAQ futures finished above 12,000 for the first time in a while, 360 points on the upside. That's 3.5 percentage points. Dow Jones finishes relatively flat, about 0.8 percentage points. You can really see tech heavy day really pulling because stimulus really affects NASDAQ. Because we saw, what did everyone do with their $1,200 check? They bought Netflix and Amazon, and specifically with Prime Day coming along. I'm telling you, we're going to be seeing a nice rally in NASDAQ. Become a 12-month strip on crude oil does not look good. Front month 39.55. That's a 2.5% drop from the overnight session starting about 4 p.m. Hurricane. As Stu will mention, there's some Libyan oil field, really supply side issues that are really driving oil markets down. We saw that back into the curve, even down about 1.8 percentage points all the way to 42.24. So Stu will bring us up to date on that. On the natural gas side, we in-depth covered this on our podcast this morning, available for the first time exclusively on YouTube because mostly I'm an idiot. Natural gas is $2.84, 12-month strip, $2.96, an absolute convergence of the price. Why? Well, Hurricane Delta shut in a couple of those feed gas plants, specifically the Cameron LNG facility down there in Louisiana. Hearts go out to anybody who was actually affected. Hurricane Delta came in and actually ripped, but there's a huge convergence right there's actually really and there's also a very cold front moving in across as temperatures begin to slow down here in February. That's really here in this fall season. That's really driving natural gas price up. As I mentioned, 12 months from $2.96. That's only a half a percentage point up. So at one point the curve was flat here, folks, and almost inverted on us, considering where it was going. But it evened out towards the end of the day. XOP, which are E&P securities contract, at least finished in the green, about a quarter of a percentage point on the upside. 44.95. OIH, which are oil field services, was up. It's actually down about a quarter of a percentage point itself, 41 cents. On that front, we look at our biggest movers on the equities. On the downside, is large movers. Sandridge Energy down to $1.68, about 11.5% drop. Gulfport Energy Corporation, 51 cents. That's 22% on the downside. And a Brayhouse Petroleum Company, they were down about 25 percentage points, down to 15 cents on the upside. Still some big numbers, as we mentioned. That XOP contract was only up a quarter of a percentage point. Still some big numbers. Our friends over at Goodrich, natural gas does well. Of course, we're going to see natural gas players do well. They're up 14 percentage points. They're popping bottles down there tonight. Camber Energy Inc., $1.09. That's 15 percentage points on the upside. And Sanchez Midstream Partners, again, up big. We ran on Friday. They were about 120 percentage points. Now up about 25 percentage points, up to 92.71. Rumor on the street has this probably has something to do with their Sanchez now Mesquite Energy actually emerging from bankruptcy and beginning to operate for it. If they're able to fill their pipelines up, that's pretty good. On there, Stu, let's cover quickly the international news desk, because there's this Libyan story that's key to what's going on in the crude oil markets right now.
Hey, thank you, Michael. Hey, before I jump there, Turkey is part of the whole problem with Libya. Mm-hmm. They are now raising their saber, and they're carrying out more seismic surveys in the Eastern Mediterranean. And Turkey has brought in, and really with the technology, helped Libya reopen their fields. Libya has reopened their biggest field, giving OPEC a new reason to have a headache. They were at 300,000 barrels per day. They could be going to 600,000 barrels per day, and it will go to even more than that shortly. So OPEC is trying to find a newspaper to smack Libya in the nose.
Well, they're trying to smack everybody, because not only is Libya 600,000 barrels over. I mean, there was a report over the weekend. OPEC was on compliance cuts. These are compensatory cuts that were supposed to make up for the fact that people weren't cutting. They were 2.8 million barrels over their compensation cuts. It's just unbelievable, Stu.
Yep, they have no control over any of their members. So as we talked about, I think we need to get NOPAC involved, NAPAC.
Yeah, we chatted a little bit about that, on that this morning in terms of the energy independence. It's definitely a fascinating conversation. On the U.S. shale side, there's just a couple things. We'd be remiss if we didn't fully cover what happened with Hurricane Delta. It's passed through Louisiana currently in a tropical storm, and actually moving up to where I was in Washington, D.C., so got out of there just in time. It was about at peak 92% of oil production, 62% of natural gas production was offline. Again, that part of the reason why natural gas is up heavy today is that feed gas into both the Libyan LNG facility and the Cameron LNG facility, with the Cameron LNG facility down the Louisiana being completely shut off, really hampering LNG markets. You can kind of pull up a price differential chart. I'd recommend just Google natural gas countrywide price differential. It'd be unbelievable to see the spreads between what's going down in the south right now and what you might find up in the northwest. Our friends over at Ring Energy grant one more extension on their Delaware Basin assets. As we remember, guys, over in March, they agreed to sell some of their Delaware Basin assets for about $31.5 million to an undisclosed buyers, about 20,000 acres. It said in April 14th, they were expected to close the deal here in October, which included a $500,000 non-refundable deposit, which they made in 6 days. They paid another $1 million as a sign of good faith, and that's what caused Ring to grant an extension here. Stu, there's a new CEO over at Ring, right? Correct. What's his name? Did we lose Stu? He might know. I think he knew who the I think he eventually.
David Fowler is the president, and he's arranging to get the new CEO on an interview with us within the next 2 weeks.
That's awesome. Do you have that guy's name? I guess not. It's a stumped question. All right. Point is, Ring going through the quick management, a little bit of a management change. Sounds like it's a great thing that's going on over there. But granting an extension here, getting a little, $1 million cash in the door, might as well. On the mineral side, we got to cover this real quick. Panhandle Minerals, goes ahead and buys a Panhandle and Harrison County minerals package for about $5.5 million in cash and about $150,000 of Panhandle common stock right here. So Panhandle is, an oil and gas operator moving into the mineral space a little bit. Personally, personally, it's smart. I think right now, as you look forward in this price environment, if prices are going to be $35 to $45 for the next, at least 24 months, minerals become a very attractive option. You can take off all of your operations, and you might start seeing some of these transactions. We've been seeing a lot of ORRIs, which are a lot of overriding royalty interest transactions going on, just really helping trying to lock in that price for producers. What I want to do right now is, partly because, a lot of the news that happened this week or this weekend or this day was really just oil price related news. We've got Libya and Turkey turning on all of this production. That's really going to cause oil prices to slump, talking about a pure supply demand commodity. But last week we ran on the show Chevron getting into the biomethane space. And that's something that's really fascinating. And part of the reason why I find that really interesting is it's about 2 days before we did that, we actually had a lunch and learn that was done by the director of consulting at Intercom, Dan Genovese, who I want to bring in right now, who's been working and really on the front lines of a lot of this renewable natural gas stuff, which honestly was something that was wildly new to me. So I'm going to go ahead and bring Dan in here. First, I'm going, Dan, thanks for joining us. And second, first, you got to give us just what is renewable natural gas? First of all, just what is it?
Yeah, so renewable natural gas, thanks for having me, Michael and Stu. Renewable natural gas is simply the methane that is created primarily in the agricultural space by the decomposition of crops and other types of things, but more specifically, the manure of cows, pigs, chickens, all that, as it decomposes, it emits methane, and so the ability to capture that rather than drill a long lateral well, you can basically throw that material into a anaerobic digester and separate solids and gases. You can literally take that biomethane and you can put it through a polisher, a scrubber, cleaner, a series of equipment that gets it to pipeline quality gas that is indistinguishable from shale gas, processed shale gas, and get it on a pipeline, transport it to a lot of it goes to California because of the low carbon fuel standards and the incentives and really
that's one thing we wanted to dive into. We're going to have to dive into that after this.
Yeah, that's a big economic driver for the profitability of taking this biomethane. But also, there's a lot of voluntary buyers out there. So corporations that are trying to reduce their carbon footprint are looking to contract out and buy at the source biomethane and buy those credits and contract for it. So it's a growing industry. It's actually rapidly growing, and I think the reason why is not only is there this demand, say in California for low carbon fuel credits, and then also from progressive companies that are looking to reduce their carbon footprint. But listen, the midstream and pipeline companies are extremely interested in this because think about it. It's first of all, it's a product that they're extremely familiar with. Secondly, as the energy transitions, this extends the life of the pipeline assets that are the thousands and thousands of miles of pipeline assets throughout the country that they have an investment in. This extends the life, almost indefinitely. And what we're looking at is projects that have a negative carbon intensity of negative 100 to 250. I mean, so it's actually reducing carbon that's being emitted.
Yeah, no, it's pretty wild when you think about it. And you mentioned these low carbon fuel credits, and I thought that's something that's interesting. So is that really what, I don't want to say got this going, but that's one of the biggest economic drivers of why people looking at this is the fact that I remember you showed this graph. It was like, what is it, like $70 you can theoretically sell this for because of the fact that you can have these credits attached to them?
Yeah, the price varies, but California requires that diesel get offset by a low carbon credit, and the higher I say the higher, the better. The lower the carbon intensity of the feedstock, the manure, and there's a whole industry of consultants that work on this stuff. The more valuable it is because within California you still have trucks running delivering products. It's the most populous state, and they demand goods, and those goods have to be transported not in a Tesla, but in a tractor trailer, and a lot of them are the requirement is that they switch to natural gas, and that natural gas that they're using is this negative carbon footprint natural gas.
That's interesting. So being on the, really being on the front lines of this stuff, I mean, obviously you said it's a growing industry, and you kind of laid out some reasons why. Where do you see this going then? I mean, do we expect to be seeing renewable natural gas starting to play a huge part of our energy consumption here in the next 5-10 years?
Yeah, I think that there's going to be several states that have kind of are working or in the process of trying to replicate what California's done, Oregon, Washington, and even Midwest states, certainly some of the East Coast states, some of the more progressive states are looking to create a similar thing where, listen, demand will increase for, as you know, the demand to reduce carbon footprint is coming from everywhere. So I see the negative carbon intensity, as being, kind of a fundamental driver. Because let's say that you have a glass plant and you're using a lot of BTUs of natural gas, you're a prime candidate for saying, hey, I'll volunteer to offset. 50. I'll take 50% of my BTUs in biomethane. So I think this is going to be growing, and we have a lot of agriculture in America that provides an opportunity to create more and more biodigesters. It's interesting on the projects that I've been working on. It's always great when you find out that there's a major interstate pipeline running, a half a mile from the farm, and it's typically agriculture. So getting an easement to tap into that pipeline is relatively simple. So I think we're going to see it grow. And this is something, even back when I was working in alternative fuels at Chesapeake Energy, this was something that, all the way back then was, it was out there, and you kind of saw the momentum growing for it.
And it's really fascinating. And like I said, you've been able to see this evolve with him. How do people, someone's listening to this, they're interested, man, I want to get in on this. How can they do that?
Well, first of all, give me a call.
Yes,
I'd love to talk to you about it. There's lots of opportunities to invest, with what I'm working in now. I have a tremendous exposure to a lot of special purpose, companies that are doing, one-off digesters, companies and that are doing multiple, have a whole project pipeline. Listen, you talked about Chevron. I mean, BP a couple of years ago acquired Clean Energy, which was, which they have their redeemed natural gas, and that is, that happened, even a couple of years ago, well before Chevron. I think you see traditional oil and gas companies kind of jumping in because, again, it's something that's familiar to all of us working in energy, and it extends the life of some of the assets that many of these companies have invested. So, great opportunities. Call me. I love to chat with you. Reach out. Go to our Intercom website. You can find my email address right there, as well as my phone number. So, love to talk to you about it.
Yeah, I really think that this is a really interesting kind. I honestly had no clue about what this was until you gave it lunch, so I really appreciate it, Dan. But we've gone over the normal time that we allot with you guys, so we're gonna go ahead and let you guys get out of here, get back to work. Thank you for checking out the daily energy market summary here on the 360 Digital Closing Bell and Oil and Gas 360. For Stuart Turley, who's about to get on this flight, for Dan Genovese, who's sitting at home right now, and me, I'm Michael Tanner. We will see you guys tomorrow for the Digital Ticker. And please listen to our podcast, which is exclusively available on iTunes. On YouTube. We'll see you guys tomorrow.